But let me welcome on board Rana Gupta and chat about what he's making of the markets right now. Rana, hi, good to have you in ET now. Thanks for your time as always. Just wondering how you're looking at the market construct, or is it going to be just what happens in the next 90 days and then what happens after? Is that how we're supposed to break the timeline?
Good morning. Happy to be with you all. I think next 90 days, what has started about 30 days back, and next 90 days are very important for the market. But I would like to highlight that this is the beginning of a very long process where the global trade and investment flows are getting will get rebalanced. And after 90 days, we can get some finality maybe in terms of tariff rates, and that can be lower than where they are currently. But that does not mean that all the uncertainty behind us. In fact, the hard work starts after that because the corporates will have to work out their investment plans, their supply chain relocation if applicable. All these are going to be quite complex and will create a quite a bit of uncertainty. What we can say is that for the rest of this year, because of this uncertainty, the growth should be a little lower than what we expected in the beginning of the year, and inflation, particularly in the US, will be a little higher than what we expected at the beginning of this year. So global markets as well as emerging markets, including India, has to contend with all of that. So it's just not 90 days; it's going to continue well beyond that.
So, Rana, what do you think is going to pose a challenge for India in particular? Because one has already seen that India and US, not a done deal yet, but at least are close to, seeing eye to eye when it comes to tariffs. China, of course, is a separate story altogether. The good thing is been that for India, at least in the last 1 month, the FPI money has been coming back. And to be fair, for us, the correction already played out, a large chunk of it from last year up until the first quarter of this calendar year.
No, that's absolutely right. I think India started this kind of tumultuous time in the financial markets in a good shape in the sense because of the selling, the positioning was already light. Also, I think as a result of the tariff situation, the India's export to US is 2% of GDP. So the direct impact is indeed limited. In fact, one of the lowest across all the emerging markets. Uh, and good part is that the current policymakers, they are trying to forge this FTAs with US and UK, which are all positive. This should increase in time FDI investments, and India should be a worthy candidate for the supply chain restructuring if and when that happens. But that's all long. That's all medium to long term. In the near term, there will be undoubtedly some consequences of the global uncertainty that we spoke about. But the good part about India is that there is some policy support because of the robust growth and the reform that has happened in last 10 years. We are pleased to see that even during these uncertain times, RBI could ease the monetary policy. There is significant amount of liquidity injected, rates cut, and then there is fiscal headroom. I'm not saying that will be utilized necessarily, but that gives us some sort of comfort. So the way we are thinking about India near-term policy uncertainty, yes, but at the same time, there are policy offsets. And the medium longer term picture continues to be quite bright on the back of India being getting more integrated into the global supply chain. And particularly in that context, the areas like pharmaceutical, CDMO, electronics, textiles, on those areas, I think India stands on a very good footing.
All right. Hi, Rana. Good morning. This is Shrishti also joining in. Great to be speaking with you. But Rana, since you just highlighted that one can take a short as well as a medium-term view, let's break it down that way. If somebody has to take a short-term view, given so much of uncertainty around which sectors are the preferred bets right now, and believe that the medium-term story stays intact for a lot of sectors, where are you placing your bets within that?
So let's break it down in short and medium to long term. In the short term, clearly, I think the globally linked sectors, whether it is IT or metals and all those sectors, will face some headwinds. Although the correction that we have seen in large IT gives us some comfort, but I think the headline wise, the earning momentum wise, they're still going to be soft for a while. On the other hand, the two positives that we are seeing in the Indian markets, the policy support on the rate side, liquidity side, as well as the global crude oil price fall. This means that the consumers sector could see some revival because of tax cut and rate cut. At the same time, the input costs can go down because of the crude oil price falling. So that is one sector that we like. We also at the financials because we think credit growth is going to pick up after being very pedestrian for last about almost coming to 12 months now. So that is also one segment we like. In the medium term, in the short to medium time, we continue like the Indian infrastructure segment, which are non-trade related. And because of the correction, I think they are offering now good risk reward, and this will be something like in the power sector. Also the telecom sector looks quite steady to us in the longer term, and this is quite long term. For long term patient investors, I think it will be time to look into dive deeper into the electronics manufacturing value chain, look at the beneficiaries, the component suppliers there, also to look at pharmaceutical CDMO, and as well as the textile sector. These can be the long-term winners out of the supply chain relocation. But again, the word of caution is, many can get excited by saying that Apple has now announced they will relocate the production of iPhones bound to US in India, and that should not make us believe that the supply chain relocation is easy. We know for a fact that Apple started 5, 7 years earlier, and that's why they're in a position right now. So no doubt, I have no doubt in electronics, in pharmacy, DMO, in textiles, India will gain market share, but patience will be required.
Okay, hi Rana, this is Snehi also joining in. Good to be chatting with you this morning. Want to get your view on the earnings outlook. Now, Nifty earnings so far have been largely in line with what the street was expecting. Most of them. It's not been all that bad. It's not been too great either. What's the outlook going ahead in terms of re-rating? Do you believe we have navigated the volatility well enough, or do you believe some of it is still in store for us going ahead? And where are you seeing some earnings downgrades, upgrades? What's been looking good to you so far?
So again, because India entered a slowdown a little earlier, sometime in the October quarter last year, the earnings have been cut. The earnings have been cut to a fairly realistic level in our view. So broadly, I think the consensus still expects early teens. There can be 1-2% downgrade to more like 11-12% kind of earnings that can come down to. And the global linked sectors is probably most likely to see downgrades. And whereas the domestic linked sectors, they will most likely maintain the current DPS momentum that they are. So therefore, we do not see too larger downside surprise in earnings, probably 1 or 2% here and there. But I think the thing to look out for is that's FY26. And based on that, once we look at FY27, I think the earning growth in 27 over 26 is going to pick up fairly robustly, because by that time we will have a benign base, and also the full impact of tax cut, rate cut we would have played out, and the tariff situation hopefully would have settled by then, so we can get some capex also back. So FY26, a bit more downgrades, a bit more volatility, but a pretty robust outlook for 27.
Rana, having said that, when you study the texture and color of the FPI money, which we've seen coming into India markets for the last month and a half, does it seem like it's more tactical in nature ever since the entire tariff tirade and money moving, or rather uncertainties looming over how the tariff implementations are going to bear effect on China? Do you think it's more of an India versus China play, that while things are uncertain on China, that money is coming down to India?
I think, the investors, particularly the regional investor, we always weigh the option between China, India, and other markets. So there is a bit of that, yes. In fact, if you recollect that October to February, the India specific outlook that we have seen also has to do with India's overvaluation, India slowing down, as well as China doing a lot of things during that time frame. But I think that October to February period has corrected the FI ownership. As per our understanding, the FI ownership in emerging market funds in India has come down to neutral or marginally under. So I think there will be, as in India kind of holds out in this tremendous volatile market events, the policy offsets cushion the short-term uncertainties, and the long-term looks much better. I think all these emerging market funds will have to relook at that position. So therefore, one would imagine that H2 or later of H2 this year, we should see that the foreign flows kind of coming back. And I would say that these will be quality flows, because I think that neutral underweight position on India on many emerging market funds one would be required to really look into, given the way the global landscape is shaping up, and also the Indian markets are functioning.
All right, Rana, I remember that when you connected with us last time back in October, you were of the view that you don't think that the PSU run-up is over. But of late, Rana, nobody has been talking about this particular space, and given the move that we have seen in the banking names, then the PSU banking names are definitely taking that back seat in comparison to the private banks. But specifically within the PSU basket, Rana, do you still stick with that view that the run-up could be in the offing, as well as which are the pockets where you are finding value?
I think within the PSU basket, I think the banks are not performing right now because the point being, the interest rates are getting cut, and people suspect that their net interest margins will decline with interest rate cuts. And PSU banks, more by and large, people do not expect the pretty fast credit growth, which will offset for the margin decline. That's the reason why I think they are lagging a bit, and I think that's a reasonable view. That said, I think in the PSU basket, the segment that we like is in the PSU segment, and otherwise is the defense. The defense segment, I think we'll have to see how much higher expenditure, not just in India, but globally. So that is one segment which can see not only earning growth, but earning growth for a longer duration, and therefore some amount of re-rating also for the defense stocks, even from here, cannot be ruled out.
Okay, Rana, appreciate that view coming in. On that note, we'll let you go. Thanks once again for joining us, and great to be chatting with you this morning.
If you like this video, then like, share and subscribe to ET Now.